All right, guys, welcome to my August video for July stats. I apologize. It is already August 24th, and I'm just now recording this video. Usually I'm doing this video first couple weeks of the month, but for those who don't know, my wife had a baby. It is our first child. She gave birth to our son Pierce a little bit earlier than expected, so the past couple weeks I've had my hands full with all of that, and that's why I have not been around to do this video and get this out in my newsletter. So apologize for that, but also that kind of contributes to why Andrew is not here with me for this August video. My schedule is just too hard to predict, and I just found it easier to just do this one myself real quick. So today we're going to talk about a few things. We're going to talk about rates dropping. We're going to talk about real estate reviews. What are they, and why am I offering to do one for your house for free? We're going to talk about election year trends. We're also going to talk about stats like we always do, and changes in place to the real estate industry as part of the DOJ and real estate class action lawsuit settlements. So jumping right in, for those who have been watching, yes, rates are going down, and talk with the Fed Reserve and Jerome Powell, the chairman, is that there might be another rate cut coming our way for the Fed base rate in the month of September, which hopefully will mean even lower rates coming for mortgages. As of August 23rd, Friday, according to Mortgage News Daily, the average 30-year fixed rate was 6.44%. Which for the past 52 weeks, the average high was 8.03. The low was 6.34. So hopefully we will continue seeing those rates go down. When rates go down, that is going to lead to a few things, though. Those first-time home buyers who have been facing the affordability crisis and haven't been able to get their hands on anything, rates going down will increase their purchasing power, and hopefully they'll be able to enter the market and achieve the dream of home ownership, as well as that golden handcuff effect, where you've got sellers who are sitting on a low rate. They are not going to sell their house and buy something new, even though they would like to, until those rates come down. So as the rates come down, you might see some of those people get off the fence, sell their home, and buy something new. So in all likelihood, as the rates go down, the competition and buyer activity will go up, as well as there probably will be an increase in inventory a little bit too, for those people that are sitting on existing homes and just waiting for rates to go down before they sell them. So that is something to look forward to with rates going down. Real estate reviews. I talked about at the beginning how I'm offering to do them for free for a property that you own. Why am I offering to do those? If you are someone who has a low interest rate and you're watching rates go down thinking, okay, I need to sell this home, I need something new, but I'm just waiting for rates to go down, I'm wondering what my house might be worth when that time comes, let me know. I will do a real estate review on your home, letting you know what I think the market value is. Maybe you are someone who bought your house in the high interest rate environment, and you're looking at rates going down and thinking, okay, when's the time for me to refi? When is that time, and what's my house worth when they do the appraisal on my refi? Let me know. I will do a real estate review for you, giving you an idea of that. Or maybe you're someone who is thinking about taking advantage of the equity in your home to stay in place but renovate. Maybe redo the basement, maybe add an addition, or renovate the kitchen's bathroom, something like that. Make your house more comfortable to stay there longer. According to census data through the end of July, over 2/3 of Americans have paid off their mortgage or have at least 50% equity. So 39.3% own the home free and clear. Just think about all the older homeowners or homeowners who have owned their home for a long time. A lot of them out there own the home free and clear. 29.9% have over 50% equity, and only 30.8% have less than 50% equity. So according to the Fed Reserve, at the end of July, home equity loans were increasing. So they were ticking up. So maybe you're someone who's thinking about getting a home equity loan or a home equity line of credit, and you're wondering, when they appraise my house for that loan, that line of credit, what's my house likely going to appraise out at? Just let me know. I will do a real estate review for you and give you a better idea before you pull the trigger on that. I'm not saying you should do a home equity loan or a home equity line of credit. It's all case by case scenario. Those aren't, those loans are not the same thing as, typical fixed rate home mortgage. So you want to talk to a lender about that before you pull the trigger on that. And I'm not going to give you advice on that. That's something for another professional to guide you on. But just letting you know that those are increasing nationwide, and it might be something of interest to you if you're looking to stay in your home, but just add on to it or renovate it or improve it. So election year, let's talk about that as we get closer to November. More and more people are talking about what happens in an election year and what happens to the real estate market. A lot of people say, like, I'm going to hold off. I'm just generally cautious, a little bit leery of candidate policies going into place. So just give you an idea, mortgage rates leading up to the 8 of the last 11 presidential elections, mortgage rates have decreased. So 8 of the last 11 mortgage rates have decreased. Home sales after the presidential election. 9 of the last 11 presidential elections, home sales have gone up. So if you're thinking about sitting on the sidelines, just seeing, let's see what happens with the presidential election, 9 of the last 11 times it has gone up in terms of market activity. So just be prepared for that. More buyers, maybe more sellers, but also more buyers. Existing home prices have gone up 7 of the last 8 presidential elections. So thinking, I'm just going to wait to see what happens with the election. Well, if you are a little, if you're a little concerned about home prices, stats show 7 of the last 8, those home prices go up for existing homes, and new home prices went up 10 of the last 11 presidential elections. So as it is right now, I think according to Zillow, I saw a stat recently that existing home price per square foot, that growth was outpacing new home sales average sales price per square foot. So that growth on the sale price per square foot, it's outpacing on the existing homes compared to the new homes. So anyways, whether you're looking at buying an existing home, a new home, you're concerned about prices, you're concerned about rates, you're concerned about market activity, it's going to ramp up. So if you're concerned and you're thinking, I'll just wait to see what happens after the election, you're just waiting to see conditions become more competitive for you. So let's move into stats. So like we always talk about, average sale price, month of July 2024 for St. Louis County, St. Louis City, St. Charles County, Jefferson County. This is just the Missouri side. I apologize to you Illinois people. I am not licensed over there, so just talking about the 4 major counties here on the Missouri side in the St. Louis metro. For the month of July, they were all down. Well, not all of them. Sorry. St. Charles County up 1.8%. Jefferson County up over 6%. But St. Louis and St. Louis City, they were down. Now, that is just the month of July. If we're looking at year to date, so where are prices at this year compared to where they've grown year to date last year? Year to date this year, they are all up. So for all the talk about prices going down, no, they are continuing to go up. So St. Louis County over 2%, St. Louis City over 2%, St. Charles over 7%, Jefferson County over 5%. Homes for sale, though, the inventory is increasing. There are more homes sitting on the market. So for all of our counties, they are up. St. Louis City and County and St. Charles, Jefferson County as well. St. Charles, the worst one there at 29.3% increase in homes for sale for the month of July. New listings, though, those are down, except for St. Charles. St. Charles has an increase in new listings. Maybe there's some consistency there in the active inventory for the month of July, as well as new listings. Increase of 13.6%. I'll have to look into the data there, see if there's big new subdivision that was built out there or something like that. Could be. So those are the new listings, though. For the other counties, those are down, which is, that's not unheard of for the month of July. You get to the end of the summer, families are looking to wrap up vacations before the school year starts to get really hot. You got 4th of July and other things going on, so not unheard of for the market to kind of slow down in terms of new listing inventory. Average days on market, though, St. Louis County, that was flat. St. Louis City, up. St. Charles, up. Jefferson County, up. So days on market on average. There are homes that are starting to sit. So this goes to another conversation. One conversation we already had, affordability crisis for buyers, not as many buyers out there, but also dangers of overpricing. One thing that I've noticed this year, if it's a great house and it is attractively priced, it's going to get competition and it is going to move fast. But if it is A, not attractively priced, or B, it is not a great house, or a combination of both, it's likely going to sit. And so we are seeing a number of price reductions increasing across the country. According to Realtor.com, through the end of July, there were over 326,000 price reductions. And that was an increase over June and May and April and March and February, January. Look at the slide in front of you. They have increased month over month this whole year. So if you're selling your house and you are feeling ambitious, do not get carried away with your initial list price, because there is a chance it will sit there and then you'll have to price reduce in order to get a buyer to get in the door. So price it appropriately and it won't sit. All right, other stats, showings per listing, like I was saying, affordability crisis and July slowdown. We've seen a drop off in buyers compared to last July. Every single county there is down double-digit percentages compared to last July. So showings per listing down. Now, month supply of homes for sale, conversation about, is it a seller's market? Is it a buyer's market? You may have seen some trending news stories about some markets around the country starting to get closer to a buyer's market. What is a buyer's market? What is the seller's market? Seller's market is 6 months or less of inventory. Buyer's market is above 6. That middle range, balanced market, 5, 6, somewhere in there. So there may be other markets in other parts of the country, particularly those COVID Zoom towns that boomed with COVID. They are now seeing a drop off. Or maybe Florida with their existing condo market. Those are starting to sit. You're seeing an increase of inventory there. But anyways, back to St. Louis on the Missouri side. We are a long way off from being a balanced or buyer's market. So 1.6 for St. Louis County, 2.8 for St. Louis City, St. Charles 2.2, Jefferson County 2.4. So still very much a seller's market for those who are curious. All right, that is that. Oh, changes in place for the real estate industry. So real estate industry, a few major changes. St. Louis marketplace has they took early action, and now nationwide, as of August 17th, everyone has to comply. So what are the rules you need to be aware of if you're a buyer looking to buy a house? You want to go see a house, you have to have an agreement in place with that agent who is showing you that house. So gone are the days of you just calling an agent and say, hey, will you set up a showing for me to this house? Just, no obligations, or clicking around on Zillow, getting connected with an agent and just hoping to meet them there and, have them open the door for you. That's not happening anymore. You have to have an agreement with that agent who is showing you that property before they show you the property. So that's a good thing. That is something that I think all realtors can get on board with. That involves some sort of consultative meeting or conversation before engaging in some sort of buyer-agent activity and buyer-agent working relationship with you as the buyer. So that's a good thing. You should know the rules of the road and how it all works before you get out there. So all on board with that. Other thing that has changed, the MLS system has removed all commission data out of the MLS. So when you are a buyer and you're looking to buy a home and you're working with the buyer's agent, that buyer's agent can no longer just go into the MLS and see what the commission is that the seller and the listing agent are offering towards the buyer's agents. So if you're interested in that home, that buyer's agent has to call the listing agent and find out, is the seller offering any sort of commission up front? And if so, what are the details, and can you send me the form? There's now a form that listing agents, sellers and buyers agents all have to fill out and sign that discloses what commission the seller is offering. Even if they are offering a commission or not offering a commission, there is now a change to our contract. So the contract in the sale price and credits section, there is now a line there that is for the buyer to request the seller and listing agent to basically the buyer requests the seller to credit them either a flat dollar amount or a percentage of the sale price towards the buyer's agent's commission. So if you're a seller, you're offering something up front, the buyer can still request a different amount on their offer. You're a seller who says, I'm not going to offer anything up front. The buyer can still request it as part of their offer. So then that leads to a conversation between the listing agent and the seller on just trying to establish what is the true net of this offer. So we've got the sale price, we've got the closing costs if there's any requested, and we've got the buyer's agent commission included in this offer. That leads us down to a net as well as any other dollar amounts requested as part of home warranty or anything like that included in the offer. So it's all negotiable now. People have asked, does this mean that there's not going to be any buyer's agents getting paid by the seller and listing broker anymore? Are buyers going to have to pay for their own agent? It's expensive enough as it is buying a house right now. If you're a seller and you want top dollar for your house, you want to reach those new heights in terms of sale price for your neighborhood, you want to stretch the envelope on price per square foot, whatever your ambitions are, the only way you're going to do that is competition. And in order to encourage competition, most buyers are working with a buyer's agent, and they are not going to be able to pay out of their own pocket straight cash the buyer's agent's commission, because again, a lender will not allow you to finance that commission as part of your loan. That has to be paid separately outside of your other closing costs and inspections and other things. Like you got to pay that commission separately if you're going to pay for your buyer's agent yourself as a buyer. So that all leads back to no, I think that sellers and listing agents are still going to be paying some sort of commission towards buyer's agents because if we want that, if we want the housing market to continue to move forward and the sale prices to continue to go up as all sellers do, you need as many buyers in the door as possible. And if you're not going to pay any sort of commission, you're going to make all the buyers pay their own commission towards their own buyer's agent themselves. You're going to shoot yourself in the foot. So and again, it's all just a percentage, and all the sale prices we've seen before this new era, those all have had some sort of buyer's agent commission for the most part baked into that sale price. So again, that's just the way it's going to work, and I don't see there being much change. Maybe at the luxury home prices, those buyers, they've got plenty of money to pay their own agent, or investors, they may decide to work without an agent. But if you are you want representation, you probably won't be able to pay it out of pocket, straight cash for your own agent. So you need to find some way to work that into the deal, and buyers need to know that so you don't get scared away, and sellers need to know that so that way you don't get confronted with every single offer you get includes some sort of buyer's agent commission included as part of the offer. So that's that. 22 minutes. Let's end this. Thank you. I apologize for the delay. I don't have the kid here with me. He is taking a nap, but thank you for your patience. And if you've got any questions about rates, if you've got any questions about real estate reviews and what your home is worth, questions about stats in election years, or changes in place for buyer's agency commission policies, any of that stuff, let me know. Shoot me a DM, text, email, call me, whatever. I will answer whatever questions you got. That's about all I got. So that's it, guys. Thank you.